Why the heck did your bank deny you for business funding, and what are you supposed to do next? That's exactly what we're going to dive into right now during today's training. We're going to talk about the most common reasons you'll get denied for the loans and credit lines that you need the most, and how to turn those denials around to actually get approvals. Look, it's a proven system. I'm going to show it to you right now. We got a lot to cover, so let's dive in. All right, so the biggest reason that business owners get denied when it comes to loans, credit lines, and even credit cards has nothing to do with income or credit. It actually just has to do with how your business is structured. You see, lenders and credit issuers want to give money to a credible business. So in order to look credible in their eyes, there's several things you want to do. You want to set up your entity, have an EIN, preferably set up a corporation or an LLC, have a business address, a business phone number, a business bank account, even a business license, have a professional website that reflects the products and services that you offer, and make sure you have an email that's congruent with your website URL as well. If you've done these things, congratulations, now you look credible, and that's going to prevent the biggest amount of denials that take place because you just don't meet the basic requirements that lenders have. The next thing you want to do is take into account whether your denial has to do with business or consumer credit quality. Now, the great news is if it was due to consumer credit, they're required by law to notify you in the mail. So you're going to get a notice saying, hey, we denied you, we looked at this bureau, and here were the issues that we saw. If you're denied by business credit, it's hit or miss. Sometimes they'll tell you your denial is because your business credit wasn't established or isn't good enough. Sometimes they won't. But if you're denied, one of the best things to do is look at your consumer credit. Is there any surprises there? Is there anything there that you think would prevent you from getting approved? And also pull your business credit reports. You can do this at creditsuite.com/monitoring. There you can take a look to see, do you have established business credit reports? Do you have anything negative or low scores on your business credit reports? Look, surprisingly, the bureaus Experian and Equifax will give you negative business credit reporting scores just because you have no credit. So you have to establish business credit. And the better kind of loans you want, term loans, lines of credit, SBA loans, oftentimes require good established business credit to even get approved. So did you review your consumer credit? Have you looked at your business credit quality? Are both in good shape? Are both established? These are things you want to look at if you're ever facing a denial. The next thing, cash flow. How is your business cash flow? What income documents did the lender ask you for? Did they ask you for tax returns? And if so, do you show a profit or a loss on those tax returns? Did they ask you for bank statements? How do you manage those bank accounts if they did? Do you have more money going in than going out? Do you have a lot of regular transactions? Do you have a positive ending bank balance at the end of each month? Are you overdrawing the account at all? These are factors that can easily get you denied when it comes to business financing just because you're not managing that bank account responsibly per a lender standard. Next thing, do you have collateral? Look, a lot of lending doesn't require collateral. It's what's called unsecured. Credit cards, a lot of credit lines, and a lot of types of loans don't need collateral in order to get approved. But other types of loans like SBA loans or longer term loans oftentimes do. So if you don't have enough collateral or don't have appropriate collateral for what they want to see, then that alone can get you denied. So again, it's good to talk to the underwriter, talk to your representative at the bank. Hey, do you need collateral to be able to get this loan? If you get denied, what was the reason for the denial? Did it have anything to do with collateral? And if it did, consider other things that you could pledge as collateral to help your approvals. Stocks, bonds, 401ks, IRAs, vehicles, real estate, all of these type of things can be pledged as collateral. So could equipment, so could account receivables where you're letting your customers pay you on terms. For the better kind of loans like SBA loan, the more and better collateral you have, the higher your chances are for approval. Next, how complete was your documentation? Did you fill out everything on the application that they asked you to fill out? Did everything that you filled out represent that you're credible? Did you have that entity set up and the professional website, all those things that we talked about? And if they asked you for documentation, what weren't you able to supply? And were there any problems with the documentation that you sent? Meaning, did you not send them enough of what they asked for? Or did you send it to them, but the documents aren't good? You're showing big losses on the tax returns. You're over leveraging your bank account where there's a negative balance. These kind of things can get you denied just by not submitting the proper documentation or the documentation you're submitting not being strong enough to not meet the lender's approval standards. Next, high debt to equity and debt to income ratios. Look, how much money are you looking to borrow, and does it make sense for the actual revenue you're generating? Look, I'm often shocked that business owners are trying to borrow what they actually earn in top line or gross revenue in a year. Lenders aren't going to do that. Lenders are going to look at how much you're making in revenue, how much you're making in profit, and oftentimes make their lending decision based on that amount of money. So the higher amount of debt you have in total in relation to your income, in relation to the revenue of the business, is a major factor when it comes to getting approved. So don't over leverage yourself. Don't take on too much debt in relation to the actual revenue your business is generating. If you do, it's going to lead to future denials when it comes to getting approved for loans, credit lines, and business credit cards. And most importantly, the easiest way to know why you're denied and what to do to fix it is actually talk to an underwriter. Look, it sounds easier than it is. When you actually have a representative at the bank that you're talking to, they're oftentimes not going to let you talk to the underwriter. So if they know the reasons you get denied, then take their advice and know what to change. But it's even better if you can get to the underwriter. I oftentimes like to ask my rep to speak to an underwriter because I want specifics of why I was denied. They'll oftentimes tell me that I'm not able to speak to an underwriter, and I'll tell them that I have some questions maybe they can help answer. Then I proceed by asking them very, very, very complicated questions that there's no way they're going to know. Hey, which business credit reports and scores did you look at? Which consumer credit reports and scores did you look at? Did you look at LexisNexis? What did you find? These type of questions are not something a front-end banker is typically going to know. So then in that case, they'll oftentimes automatically put you with an underwriter to get those questions answered. And once you're speaking to an underwriter, why were you denied is the question to ask, and what could you have done better? For example, when I applied for an insurance policy once on a piece of jewelry, they denied me. I pushed my way into an underwriter. They told me they used my LexisNexis insurance score. They told me what to fix and told me once I fixed it to come back and apply again. I did, and I was approved. This works really, really well to turn denials into approval. So what do you do next? First, fix the things that we talked about so far during this training. The second thing is skip the bank. Look, if you're applying for more difficult to get financing, like financing that comes from your actual bank, whether it be a regional bank, a major bank, even a credit union, well, then you might be fishing in the wrong pond, meaning you might be looking for the hardest to qualify financing when you can get way easier financing. So we've got a great guide on 27 different ways to fund your business. You can get it at creditsuite.com/27. That's creditsuite.com/27. And this will give you a lot of alternative lending options, including fintech options, which are way easier to get than bank financing. Also, is your business set up credibly? Go to creditsuite.com/foundation for a detailed guide on everything lenders look for to do with your fundability, your lendability, the credibility of your business. This guide maps out everything you need to know of how a lender looks at the credibility of your business and exactly what to do to fix it to make yourself more credible. And always make sure you're building business credit. Look, business credit is as important to your business getting financing as consumer credit is to you getting financing as a consumer. So the better you build your business credit, the higher the probability you'll get approved, the higher the approval amounts, and the better your rates and terms will be. So make sure you're building your business credit to have the best chance of getting financing. If you need help along the way, then go to creditsuite.com/consult where we'll do a fundability deep dive to tell you what lenders won't like about your credibility. We'll give you tips and tactics to build your business credit, and we'll qualify you for all the legitimate business financing that's out there. You might get funding right now if you just get linked up with the right lender and the right kind of funding product. So schedule time with us to learn more. Did you get value from this training? If so, make sure you like and subscribe and keep your eye out for our next training. We're talking about more cool ways to get the money you need to start and grow your business.